This conference will now be recorded.
Good morning, everybody. It is Sunday, July 31st, 2022. This is Greg Morton, and this is the weekend update for Canslim growth stock investors from the Greenville Eastside IBD meetup group and the Stockyard meetup group. As always, this is for educational purposes only, not recommending any stocks or securities to buy or sell. All investing has substantial risk of big losses. So we want to learn first and only then invest. So today we'll look at the Impactor like we do each weekend. And then last weekend, I kind of noted, I struck out the language from last weekend that it was sort of the best of the times for indexes because they were looking good, but the worst of times for stocks because they were not looking good. This weekend, growth stock leadership suddenly materializes. So that's improved. And last weekend, I noted the follow-through day was off to a slow start. This week looks like we're gaining traction. So looking better than we had been. And we'll look at our educational monthly meetings. So the MFactor, just get right to it. It's the most powerful letter in Canslim. So as O'Neill teaches, we want to interpret, not predict. So look at three things in this order of priority: action of, and I added in there, new leaders. We don't want to look at the leaders that led the 2020 bull market. We want to see new leadership improve because O'Neill research shows that only 1 out of 8 former leaders ever comes back to lead again. And even when they do that, it could be a very long time, like Microsoft went sideways forever before it started a new run recently. We look at actions of stocks owned and market pulse, distribution day count, price and volume on the indexes, and the factors I have in the Excel coloring book. So let's take a look at those things. Let's get out of this and hop over to MarketSmith. So here's the Nasdaq on a daily basis. So this week we of course had the Fed meeting on Wednesday, and that actually kicked off 3 up days on increasing volume. Volume still below average, but we're in the dog days of summer, so that's sort of to be expected. So that's not quite as big a red flag as it ordinarily might be. And then the really interesting thing is we've had 4 subsequent follow-through days recently, including 2 this week. So we're seeing some strength. We're back above the moving average lines except for the 200. Did come down and break the 21-day here. So for the power trend to come back on, it's going to take 10 days of the lows staying above the 21 days. We have 3 days of that so far, but we'll keep an eye on that. But again, we've come back above. If you look left, came back above here, which was a lower high previously. So looks like we're making some progress, at least in a tradable bear market rally, if not a new uptrend. So it's just too early to tell which one. And of course, it could all fall apart in a week or less. So we'll just see. S&P 500. Again, it actually didn't even break the 21 when it came down. Again, you have these days, particularly Friday. Of course, that was the end of the month. Maybe some window dressing brought in the volume there. So, but again, 3 nice days starting Wednesday, high range finishes. Volume, not as great there the first 2 days, but picking up. NYSE, same thing, back above the 50-day, so 200 days still looms for all these indexes. Dow looking strong also, volume good on Friday. Russell also picking up back above the moving average lines except for the declining 200, and S&P 600 sort of looking the same. So that is looking better. And if we look at the coloring book, couple interesting things. Again, we had those 3 strong days. We now have the buying days and the selling days within the last 25-day window, starting back at the orange dot, are now tied. These have been red forever. So it's been more of a distribution or selling dominant tape, as Mark Minervini calls it. You can scroll, you can just see these are red. So had a little bit of green days there, was trying to battle back, and those red days in column C, I mean, it goes all the way back to November of last year. It started flipping red. So it's nice to see some strength there. You can see the subsequent follow-through days this week. Also, the distribution days have been dropping based on the gain rule. Excuse me, had to cough. So we only have one active one on the Nasdaq. We don't have any on the S&P 500. I have 4 on the Dow, but I need to go do the gain rule calculation because I bet some of those have dropped too. IBD doesn't track those, so I didn't have that up to date. Everything's green on all 6 indexes on the MMTS. IBD finally went to uptrend resumes this week. Market school exposure is at 5, which is 100%. Window of opportunity still open, and new highs, new lows actually are green on both indexes now also. And then the other thing we see this week, even before the Fed meeting, we had a breakout on Monday in WWE. These are all Canslim growth stock breakouts. And then on the Fed meeting, we had Solar Edge just in phase. In phase was just a massive gap up on earnings, very strong volume and price. Then on Thursday, had 3 more Canslim breakouts, and then 1 on Friday. So it'll be important to watch these, but the fact they're showing up that close together, subsequent follow-through days. In fact, Wednesday, Nasdaq was up 4%. So that was a strong subsequent follow-through day. They weren't quite as strong on Friday, but those are still significant. So we keep an eye on those. So we're seeing some progress. So that is good. We go back over here. Group teaching portfolio. I was out of town this week, vacation week, so ordinarily would have increased exposure a little bit more, just still 34% invested. Maybe an index ETF would have been good to add, but sometimes real life gets in the way, so it is what it is. And still down about 10.8% year to date, 34% invested. So let's go back over here. Yeah, so the question on the Nasdaq, let's go back to it. I thought this was looking a little bit like things did near the end of the 2000 to 2003 bear market. So if we go back to 03, let's go to a weekly chart. So the absolute total bottom was here in October, although we sort of treat the bear market back then as ended in March of 03. Of course, this is a brutal bear. The Nasdaq was down over 75% and had 1, 2, 3, 4, 5, at least 6 legs down. But right here in October of 2002, we had a follow-through day. I think it was about October 11th. This was when Bill started buying eBay, and the index here ran back up to a declining 200-day, bumped its head, came down another 17%, and then things really took off. So this declining 200-day, coming back above the moving averages and heading up into that, kind of looked like we were. Now, if we reset to today, weekly chart, you can see maybe we head back up into that, go to the daily. Yep, so wouldn't be surprising at all if it gets back that high to see it hit resistance and maybe have some of that pause, but not predicting, just kind of noting the similarities. It also could keep going up, or it could hit resistance in here and come down. There's absolutely no way to predict that. So go back over here, current market analysis. As I noted, growth stocks gained traction this week. Solar stocks were definitely shining, sort of legislation driven. They had a very strong week. In fact, let's just look at that list real quick at MarketSmith. I think I pulled it up. Yeah, so these are sorted by liquidity and just are stocks I've had on a solar list that I started back then just to group them together. So it doesn't mean these are all Canslim stocks, but let's go to the weekly. Look at these weekly gains in phase, 34%. Look at that volume. Solar Edge, 24%. Look at that volume. They have earnings coming this week. Sunrun, 37%. Earnings coming. Look at that volume. First Solar, 36% for the week. Look at that volume. So while these might not have been Canslim setups, TAND, this is the ETF. This is the one that's in the group teaching portfolio, up 18.78%. DQ up 8%. JKS Solar, this one was only up 9%. Array, maybe this IPO is coming back to life, up 41% for the week, and actually broke out of a bottoming base. There's your prior uptrend. It came out of that. Shoals, another solar stock, up 33% for the week. SunPower, 24%, and CSIQ up 14%. And then the rest of these are thin. They're under 20 million, so they're really not important to look at those. So that was nice to see. Okay, we looked at that. Also seeing potential in medicals, which I've mentioned the past couple weekends. Chip related, also legislation driven. Semiconductors or chips. And then is oil and gas going to grab another leg up? You're seeing some of those in the weekend review suddenly showing strength and setting up additional basis among some of the strongest ones there. So EPS season, any disappointment is still severely punished, and the old names are still being punished. Shop, Teladoc, Roku. I know Art keeps buying them, but they're getting killed. That's not what we're looking for right now. Very important to be looking for new leaders, names we're not familiar with, like where'd that stock come from? But it's a good Canslim stock. We're seeing some viable gap ups in phase. Got another big week of earnings coming. You know, last earnings season, there were hardly any viable gap ups or setups. I think SQM was one of the few that did work on an earnings viable gap up. And now we're seeing a lot more. So that's good. We have another heavy weeks of earnings. This is from Earnings Whispers. You can see, you know, 100, over 200 that day, over 300 between Tuesday after close and Wednesday before market opens. Wednesday after market close and Thursday before market opens, super heavy, you know, way up there, close to 500 companies reporting before the market opens on Thursday, you know, after it closes Wednesday also. So, oh no, wait, I did that wrong. Sorry, it's 266 plus 216. And then Friday's 283 plus 63. So still a lot. Sort of my current market view, I think it's green light, proceed with caution and discipline, no chasing, honor your written sell rules, and adhere strictly to Canslim stock selection criteria. I mean, be picky. You want the elite 8 on your team. You want the best of the best. Bear markets are very unforgiving, while strong bull markets overlook, cover up your small mistakes and blemishes. So I'll go with this slide. I think the go button zone, just caution still required, not stomping on the gas pedal. And then I still have the big question sort of hanging out there about QT hasn't really started, which I call the Fed has no close. What they said in their minutes is that QT was supposed to start June 1st, 2022. It was going to start at 30 billion per month in balance sheet reduction and 17.5 billion per month in mortgage-backed securities. And those numbers were to continue for 3 months, June, July, and August. And then starting in September, those numbers double. It's supposed to be 95 billion per month total. In reality, per the filed Fed data, it was filed this past Thursday, showing where we were as of July 27th. So in 2 months total, they've only cut 15.4 billion from the balance sheet, not 60 billion. That's a big shortage, a big miss. And then mortgage-backed securities actually went up 385 million over June and July. So, you know, nowhere near a 35 billion cut, actually went up. So overall, they took 15.1 billion off cumulatively between the two, the balance sheet and mortgage-backed securities, and it was supposed to be 95 billion. So they hit 15.7% of the target. Not good. So we'll just see. That's going to ramp up. So Powell this week said the market seemed to be absorbing it fine. And I'm like, yeah, but it's you're way off schedule. So it's hard to say it's absorbing it fine when you've barely started. Can't really make that judgment yet. So our monthly online meetings, the big educational meeting will be Tuesday, August 16th, 7 p.m. Eastern. You can register at the Stockyard Meetup site. The monthly tuition is $12. You get the recording, slide deck, links to webinars, articles, etc. that come up during the meeting. First timer gets the prior month meeting recording and slide deck. And then here's a list I just put in here of prior meetings that can be ordered. These are $15 each, but you get the recording and the slide deck and everything. So if you don't have a written set of sell rules, great time to do that. The recent bear market has showed us the importance of that. If you're struggling with your weekend review, we covered that in September and October 2021, walking through the paper, the Growth 250, how to pick the best of the best. And then I've got to add a couple in, but you can see the other things we've covered. So if you're interested in those, you can just shoot me an email and I'll send you the list and how to order those. You can join the two meetup sites, Greenville Eastside IBD Meetup and the Stockyard Meetup. You can follow me on Twitter. And of course, you're on the YouTube page, so like and subscribe while you're there. So that's it. You guys have a great weekend routine and I'm out of here.